One of the most complicated things to learn in trading is knowing when to lock in your profits and when to ride the trend. Lock in profits too early and you won't be able to pay for your losses. Lock in profits too late and you give back the paper profits that you have made. This video will show you how you can use some of my favorite exit indicators to help you lock in more profits. I'll be showing you how to use the Donchian channel, the average true range, and the Chandelier exit to maximize your profits. I will also walk you through the specific indicators I use to make your life easier. Many of you actually have a sound strategy or use one of the many strategies taught in this YouTube channel. But you cannot maximize your gains because you don't know how to exit. If you enter into a trade without any kind of exit strategy, it is highly likely that you will take premature profits or let a profitable trade turn into a loss. Well, if you apply what I'm about to share in this video, it could mean the difference between losing money and making a ton of money. Of course, disclaimer, I can't guarantee that you will make money, no one can. But if you diligently apply what you learn, the odds are pretty damn high you will be successful. So make sure to take notes and watch this video till the end. If that sounds good, please smack that thumbs up button to support this channel so that this channel can reach more people. If you are new and do not know about our giveaway, we do a giveaway for every single video we release. So if you want to win access to our premium Forex signals, which we usually charge $99 a month for, look for an emoji throughout this video. Once you find the emoji, like this video and comment on what the emoji is plus Forex signals in the comment section. We will announce the lucky winner in the next video, so make sure you subscribe to the channel and hit the notification bell to know when the next video is released and whether you have won. The first indicator that I want to show you is the Donchian channel. This indicator is very similar to the Bollinger Band, which I've previously talked about. This indicator was made popular by Richard Dennis, who created the Turtle trading system to trade breakouts. However, we can use the Donchian channel to better manage our trades and lock in our profits. I will show you how to use it in a moment, so keep watching. The Donchian channel plots the highest high and lowest low over a specific period. While you can adjust the period to whatever setting you wish, the typical setting is 20. Now you might wonder why 20? Well, because this indicator is typically used on a day chart and there are approximately 20 trading days in a trading month. So that's using about a month's worth of data. The Donchian channel measures an instrument's volatility. When volatility is low, the channels contract, and when volatility is high, the channels expand. The upper and lower channel lines can be seen as support and resistance line. Now, the Turtle trading system uses the Donchian channel lines as an entry trigger to enter into breakouts. In our case, we are interested in using it to exit and trail our stop loss. The exit signal is given when there is a breakout of the opposite side. You can see that in this case, by using the Donchian channel as an exit, you can capture a big trend. Many traders make a common mistake because they assume that the upper and lower lines must only function as resistance and support respectively. You should note that these lines are just like your typical support and resistance level, and that support can turn into resistance and vice versa. Now, the issue with the Donchian channel is that it often gives back a lot of profits as the opposite side can be quite far away. While it allows you to capture a big trend, it also causes you to lose a lot of unrealized profits when the price does indeed change direction. Depending on your personality and preference, that might not be something you want. And that is why we have the next exit indicator, the average true range. An indicator that doesn't give back too much unrealized profits while still allowing you to effectively ride a trend. So keep watching to find out how to use this to trail your stop loss and lock in more profits. The average true range indicator is a volatility indicator. It tells you the instrument's average price range for the past X period, though the default setting is 14 period. The advantage of using this is that it factors volatility into the equation. It makes sense to have a wider stop loss during periods of volatility and a tighter stop loss when the market isn't volatile. So what you can do is look at the ATR value and apply a multiplier to it. Some traders like to take 2 or even 3 times the ATR value to set in their stop loss. Personally, I find 2 or 3 too much, and I like to stick to using a multiplier of 1.5. The concept of using the ATR as an exit indicator is simple. If the trend is strong, then the price should not trade an entire day's range against you. 1.5, 2 or 3 is simply a buffer used to cushion against spikes that might happen intraday. Suppose the ATR value is 80 on euro dollar, though it shows 81 pips, let's just round it down. That means that you can expect the euro dollar to move 80 pips on a given day based on the data from the past 14 days. If you were to apply a multiplier of 1.5, that would mean that you will have an initial stop loss of 120 pips. If the price closed here for the day, you will subtract the average true range times the multiplier and place your stop loss here. As price moves in your favor and the average true range indicator changes, you will alter your stop loss accordingly by referencing the day's candle close. If you are lazy and don't want to manually count, then the last indicator will be of interest to you because it does it automatically for you. It is the Chandelier exit. This is one of my favorite indicators, and in a moment's time, it should be clear why, so keep watching. I've previously done a very in-depth explanation of this indicator. It is very versatile and you can use it for direction identification, trade confirmation as well as trade management. I will link to that video at the top right corner and the end screen of this video. I highly recommend that you check that video out next, but I will briefly introduce how it works for this video. The Chandelier exit is also a volatility-based indicator that utilizes the average true range in its calculation. It is designed to help a trader ride trends until there is a change in trend. By using the Chandelier exit, you will be able to maximize your returns and avoid exiting early. Besides, taking the average true range into account, the indicator also uses the highest high and lowest low for the specific period. Typically, the default setting for the Chandelier exit is set as 14, 22, 3 as seen here. The Chandelier exit works on the principle that whenever there is a move 3 times the average volatility, then the trend is likely to be over. Suppose you entered euro dollar here and use the default setting. The level that you see here is actually 3 times the prevailing volatility. A break below this level suggests that the bulls are no longer in control and it is time to exit. As a teaser of what was shared in the Chandelier trading video that I mentioned earlier, you could also use this as a signal to catch market tops and bottoms. In this video, the goal is just for you to understand that it is time to exit whenever price breaks the Chandelier exit. And these are the 3 indicators that I highly recommend: the Donchian channel, the average true range indicator, and the Chandelier exit. The Donchian channel and the Chandelier exit tend to have a wider stop loss, and thus you will be able to capture a big trend, but at the expense of giving back a chunk of profits. The average true range, on the other hand, gives you more control and lets you find a balance between securing your unrealized profits and riding a trend effectively. In case you are wondering which should you choose because they all sound awesome, well, why not give it all a shot? I wish I could give you a clear answer, but the truth is that it really depends on your personality and style. So try it and tweak it accordingly. And that's all I have for you in this video. I hope you got value. Remember to like this video, subscribe to the channel, and comment with the emoji plus Forex signals to enter yourself into our giveaway. The winner will be announced in the next video, so turn on the notification bell and check to see if you have won. I will link to the Chandelier exit video which talks about many ways you can use the Chandelier exit. I highly recommend checking it right away by clicking on the video end screen over here.